Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. Welcome to November. I can't believe October's over. My birthday's done. Halloween is behind us. Now we've got Thanksgiving and Christmas to look forward to. Don't ask me where this year is gone. I'm still thinking February of 2023. Okay. This is the fastest year of my life. All right. Folks, before I begin, I want to thank each and every one of you for supporting me during the launch of the Pro Trader Dashboard. If you want to learn more about it, follow the link below. You will learn all you need to know about it, and I'll be talking about it nonstop. And if you still have any questions, please send me an email, roger@rogerscott.com. Also, make sure to subscribe to our Telegram channel. While the day trading alerts are going to go into a premium channel, I'll be posting hot swing trades, market analysis into my Telegram channel. If you don't know where to find it, go to rogerscott.com/Telegram. And if you're looking to find these videos first thing in the morning, a lot of you are, go to the YouTube channel and go to Roger-Scott in the search box, and you'll find my videos, subscribe to them, and you'll be able to get your paws or your hands on these videos in the morning. All right, let's begin. So as you can see here, the market is down. The Nasdaq is down 74. That's way beyond random. Anything over 50 on the Nasdaq 100 pre-open is beyond random. The Dow is right at the threshold level, anything about 110, 120. So we're right there. But what's interesting today is we've got a lot of data. So it's going to be a minefield for day trading, and we're going to have to be extra careful. We may widen our stops. We may hold positions overnight. But there's going to be a lot of volatility, and I don't know what direction it's going to move into, and nobody does. So first of all, you've got earnings on PayPal, ET, QCOM, AB&B, Heinz, all today, and then tomorrow. Oh, boy. Oh, look at this. Apple, Palantir, Square, Coin, Shop, Moderna. Oh, Moderna. Boy, oh, boy, oh, boy. Lilly, Starbucks, FT&T, COP, everything. A lot of very broad base, and then it kind of ends on Thursday. Till the end of this week, you'll have mostly FANG stocks and big cap earnings. After this week, we got one more week of mid caps, and then it slows down from there. But we'll have a very good idea of where we stand in terms of earnings before the end of this week, for sure. But again, you don't want to make huge directional bet in light of the fact, because earnings are very broad-based, and like Apple's going to impact a lot of stocks. PayPal's going to impact a lot of stocks. Qualcomm is going to impact tech stocks, chip stocks particularly. So we got to be very careful because there's a lot of minefields today. In addition to that, if you thought that was it, oh boy, you've got ADP report, which hasn't been really accurate, but this will reflect on Friday's employment situation. This could set the tone. That's coming out in just a few minutes. And then you've got manufacturing final report today at 9:45. And then at 10 o'clock, you've got three whoppers. You've got the Institute of Supply Management, Manufacturing Index. You've got construction spending. You've got JOLTS. And you have petroleum report. And then you have Squirrely Powell. Yes, Squirrely Powell. I've said it, reporting later today. So, folks, this is going to be a very challenging day for investors and traders. A, reduce your position size. B, we're going to have extra volatility and a lot of unforeseeability. You're going to have to be very careful if you're short-term trading. The best thing to do right now is to pick a position, pick swing trades, and go into that direction. This is one of those days where it's going to be very challenging to day trade, and we may be scalping a lot today because we won't know directional bias longer term today. Again, it's going to be a roller coaster today. It usually is till the end of today, and then tomorrow and Friday things cool off a little bit. But again, it's going to be one of those days. The bond market, let me just see here. Let me switch this to candlesticks. The bond market started moving lower, started moving higher, but look at that. It never ever closed below the 8-day EMA right there. And now it's below. This puts pressure on stocks. This takes pressure away from stocks. This puts pressure back on stocks, which is one of the many reasons why the indices are down today. And as I mentioned, you've got all of these stocks reporting, and then tomorrow, it's a big day. So we've got to be careful, especially you got Fed data, Fed announcement, earnings. It's going to be a whopper. Looking at the Nasdaq, we are literally sitting between the 200-day moving average and the 100 and the 50-day moving average, which are close aligned. we're above this support level, but notice we're still below the 8-day EMA. So we got to be really, really careful. And when you're below the 8-day EMA, that means markets could be trading in either direction, especially when you're between two zones. We call this the twilight zone, or I call it the twilight zone. If you look at the SPY right now, and it's important that we do, by the way, the SPY is going to open up down quite in the range. Look at that. It hit the 8-day EMA. Look at why we look at the 8-day EMA. Look at what happened. It hit the 8-day EMA, and what happened? It bounced right off. And today we're below the 8-day EMA. So if we can rally above the 8-day EMA and start getting towards the 200-day moving average, that would be very bullish. But I don't know if we're going to do that the next couple of days. And we may have, I don't think today's going to be a low volatility or low range day, but keep your eye on that 8-day EMA. It's at 418.08 on the SPY. If you look at the diamond at the DIA, you will see that we're also, look at this, this is why I do these analysis. I do them as much for myself as I do them for you. Look at that, right below the 8-day EMA, even though we passed and closed right at the 8-day EMA. The 8-day EMA is a great trend indicator. It's not really something that hedge funds follow. They follow the big ones, the 100, the 200, and the 50, which are up here, and we're below all those levels. But the 8-day EMA gives you a really good indication of whether what direction the short-term trend is moving. And as you can see here, it's having a very difficult time trading above the 8-day EMA. Now, another index that I want to show you is the semiconductors. Semiconductors, you've got earnings today on QCOM. They look like they bottomed out at the 200-day line. I like this, and I also like the price action that I saw on NVIDIA yesterday. Towards the end of the day. Why? Well, not because it did so well, because it's sticking to that 400 price level. It looks like there's a strong support at the 400 level on NVIDIA. So chips may hold, but if they break this level, it's going to get very, very messy, as you will see, because there's not a lot of support below that level. So if we break down below this level, if this doesn't hold today, we can be in deep, deep doo-doo. Also, yesterday when we rallied, volume was really, really low, probably because we have the announcement today. But look at this. When we go down, look at the volume. It's above average, right? For the most part. Look here, 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 even here. 1 day below average or 2 days below average. But as we're going up, volume is lower. So be really, really careful, because it looks like volume is higher on the way down than on the way up, and volume is what legitimizes these moves. So we got to be really cautious in light of all of that. Now, looking at the sectors, and I want to look over the last 5 days, because this will give us a really good idea. This is just the last week, this is 3 weeks, and this is 6 weeks. It's useless looking at anything longer term right now because markets are all over the place. But you can clearly see utilities, home builders, basic materials, real estate, financial, retail, consumer staples. Those are all part of the Dow. Those are not consumer discretionary, technology, QQQ, communication, consumer discretionary technology are part of the QQQ. So you do have energy, you have healthcare here, which is really wacky. Look at semiconductors. But look at this, utilities, home builders, material, real estate, financial, retail, consumer staples. I just gave you 1, 2, 3, 4, 5, 6, 7 of the 11 sectors in the market, and they're all above the Dow, which means blue chips are defending us right now. And if you look at price action, look at how well utilities held up. Look at home builders, how well they rallied yesterday. Look at basic materials. Look at real estate. They actually look like they're bottoming out. But even consumer staples, retail looks like it's bottoming out. I like that. I like how things are looking right now. But on the other hand, things are not looking all that good with semiconductors. Look, it didn't break the low right here. Didn't break the high yesterday. Look at energies, didn't break the high yesterday. Communications sector did break the high, but again, look at the Russell. I don't know. So it looks like the market is trying to find its footing, at least on the blue chip stocks right now. You may see more strength in blue chips over technology, which is not good because technology is reporting right now. Now, be careful. Now let's talk and put all of this together, and then I'll talk about and give you a short and a long for today. How about that? All right, market participants are in fact gearing up for Federal Reserve interest rate decision while waiting the release of fresh labor market data. Consumer confidence index dropped to a 5-month low. 5-month low. That's not good. That's bad. but it exceeded expectations. The Chicago PMI unexpectedly fell, weaker than expected. So Fed data is not looking amazing. Earnings today, QCOM, big influencer on semiconductors. CVH, AB&B, PayPal, big consumer discretionary stock, and Heinz, consumer staples. So far, and this is where things get good, we were expecting a 1.7% gain. We got a 4.9. What are stocks? How are stocks reacting? They're not. They're not reacting positively at all. Today, all focus on the monetary decision. Later today, it's happening at 2 o'clock. Keep an eye on that. You got non-farm payroll today, ADP non-farm payroll at 10 a.m. Job openings, 10 a.m. Global manufacturing, 10 a.m. Crude oil inventories, 10 a.m. It's probably not a good idea to put positions on before 10 a.m. today, and it usually isn't, by the way. Europe, up a little bit, giving us a little tailwind. Retail stocks leading the overall market higher. China, closed slightly higher, giving us a little tailwind. Maintain cautious stance in light of the data coming out. A private survey showed Wednesday the Chinese factory activity experienced an unexpected contraction in October, indicating persistence of challenges despite their measures to support growth. They're having a tough time right now, but at least we're getting some tailwind from Europe and Asia. China and Japan closed higher, sharply higher, posting its biggest rise in 3 weeks. Investors scooped up stocks after the Bank of Japan largely maintained ultra dovish monetary policy. Folks, in Japan, if you're listening to this is not going to get you very far. This is going to get you short-term growth. If you want long-term growth, and if you don't want to be in a recession for the next 25 years, which you've been in, it's time to increase your rates. And that's what I thought the Prime Minister was going to do. Factory survey showed Wednesday factory activity contracted for the 5th month. You need to start raising your rates. I wish they could figure that out. Maybe I can fly out there and tell the Prime Minister, wink, wink. All right. Sectors. Now, I already told you, sectors are all over the place. Utilities, basic material, real estate. But again, all of these are still at the bottom, and they could churn. The one I really like here is utilities. That one is showing very steady growth. And consumer staples. My favorite right now are utilities and consumer staples. They've been my favorite all week because they actually haven't lost any directional bias. Now, let's talk about stocks, okay? Let's look at stocks breaking out and see what we like. I like X. I do like U.S. Steel. I like T-Mobile. I like U.S. Steel. I really like Annette because of the volume right here, and it took out the range. So I would say my favorite right now would be Annette, T-Mobile. Let's see what else. There's just not a lot of good stocks to the upside. I like the UUP, the Invesco US dollar. This one looks really good right now. It looks like it can break out. And GPCR. I gave this yesterday in my VIP room, actually. That's a good stock, too. So I like those stocks. I gave you several to choose from. Now, to the downside, that's going to be easy. Real easy. Let's see here. There's just so many. Caterpillar looks really weak. Love looks very weak, and it looks like it can continue its downtrend. And FMC. So FMC, Caterpillar, and Love. Those three. All right. I think I've done a pretty good job for you today. Now, folks, everyone, and I mean everyone, is super excited about the launch of my Pro Trader dashboard this week, and I can't blame them because I'm just so happy about this. This is an accumulation of my life work, folks. Really, I've been trading since the summer with amazing results, and you all know that because you've been taking those trades. They've been in my Telegram channel. It's part indicator, it's part scanner. And even though it looks like a lot of information to digest, it's actually really easy. And once you start using it, you will be addicted. You will look everything through that indicator and the scanner and the relative strength guide. You wait 30 minutes after the market opens, especially today, so the dashboard can track a stock's average true range. That runs a scan for the day's top stocks and look for green and red arrows to signal entries and exits. It's easy, it's fun, and it forces you to stay on the right side of the market. A lot of you guys like to play games. This forces you to focus only on what matters. If those things don't hit, your odds are 50-50. If they start hitting, your odds are going to go all the way to 80-90%, as you've seen from all the trades in the Telegram channel this summer and fall. It even gives first, second profit targets and a stop loss immediately. So your day trading blind days are behind you. You'll know exactly where to enter, exit, and put your stop loss. Check out the link below to learn more about it and get to trading. And remember, as of Monday next week, all those juicy Telegram day trades, they're going to go into the premium day trading channel, and I'll start posting swing trades in the swing trading channel and day trades in the day trade channel. But no more fast day trades. So if you want to get those day trades, get the indicator and get access to the day trading room. I will see you later. Don't forget, post below this video. Send me an email if you have questions, roger@rogerscott.com, and I'll see you at noon. Be very, very careful. There are tons of landmines today.